As price is about to retest a major key level near $38, IonQ updates its quantum value timeline after Nvidia Jensen Wang gives his own timeline of 15 to 30 years. So before we continue with the analysis, let's actually look at this article. It started with Alphabet's Google announcement of a major quantum breakthrough with its Willow chip. That was on December 9th, when they revealed Willow chip allowing quantum computers to self-correct errors better than any ever computer. Quantum computing stocks soared on this announcement. It seemed like the future had arrived. Then Nvidia's Jensen Huang and Meta platforms Mark Zuckerberg threw cold water on the party. According to those two tech CEOs, very useful quantum computers are more than a decade away. In fact, Jensen said it was 15 to 30 years away. And then quantum computing stocks crashed. And with so many conflicting opinions floating around, the CEO of IonQ, Peter Chapman, has some things to say. And he's setting the record straight with some concrete goals for IonQ's future. Ion Chapman's put together a timeline of his own. By 2030, he said he believes the company will generate close to $1 billion in revenue and will also be profitable. Chapman is calling for astronomical growth. IonQ expects to generate around $40 million in 2024 revenue. If it generates $1 billion 6 years from now, that would represent a greater than 70% compound annual growth rate. Crazy, crazy stuff. IonQ's $1 billion revenue goal is impressive, but once the technology is hitting its full potential, the market should be much larger than this, making $1 billion relatively small by comparison. This suggests that the more meaningful industry growth will come after 2030. When it comes to Ion stock, it's expensive to climb aboard the train for 2030. The company already has a market cap of $8.5 billion as of this writing. This means that the stock is valued at 8.5 times its potential sales 6 years from now. For perspective, some investors believe the 8.5 times sale is too expensive for trailing 12-month sales. Paying that much for 2030 sales is quite steep. IonQ's business is poised for sensational growth, but the stock is still a risky bet today. For many investors, the best course of action will likely be to wait. But if you are aggressive, you get in, allowing the quantum computing industry to pass more milestones before picking stocks in the space. So it really depends. Now, you had a sensational level to get long on the steep pullback. We're talking a nearly 50+% pullback before price moved higher, roughly covering half of that downfall. And as we say in trading, price always fills the gap. Now you do have a gap here at between $30 and $33. However, you have a larger gap between $43 and $50. Now, where's price heading? Well, based on the moving averages, prices are going to move up. Based on the moving averages, you have to remember the moving averages is a lagging indicator. Or price could pull back even further. Why? Well, your moving averages have expanded a lot since they had consolidated back in October. One could also say if price closes below this key level at $35, price could be putting in a lower high, potentially eventually putting in a lower low. So it depends on your risk tolerance, time horizon, financial objectives. For aggressive traders, you may want to wait to see if you get a bounce. For conservative investors, you may want to see what happens even after the bounce. Now, I have to agree with the article. Look where price was just 6 months ago. You were trading south of $10. Price is nearly 3x from the lows of August and July. So let me know what you think in the comments. Is IonQ a buy, a hold, or a sell? Thanks for watching. Subscribe. Please like the video.